India's ecosystem for EV is still in its early stages. In 2024, Ola sold over 3 lakh electric scooters, net loss of around about 1500 crores. India has become the world's third largest automobile market. But when it comes to electric vehicles, we are still in early days. This is also the perfect moment for many players, both local and global, to grab market share and ultimately build the future of the Indian EV market. But the road ahead isn't smooth. There's a lot of challenges that are there. So today we'll look at the Indian EV market in depth. We'll cover 6 things. The first thing that we'll cover is Tesla's entry into the Indian market. The second thing that we'll cover is BYD and China's EV boom that we're seeing in the world. The third thing that we'll cover is we'll look at Ola Electric's post IPO performance and how there are big questions that are there, but there are also big bets that they're making. We'll also look at the recent Blusmart and Gensol fraud case. Finally, we'll also look at the upcoming Ather IPO and ultimately legacy automakers EV push such as Tata Motors, Mahindra and many others. So let's get into it. After years of stop and start engagements, Tesla is ready to enter the Indian markets. Elon Musk has already called India a very hot market, and in early 2025, the company has secured showroom spaces in Delhi and Bombay. It's even begun hiring local operational people and also sent samples of the vehicles to regulators for testing. But the ultimate biggest challenge that Tesla is facing here is the import tariffs. India typically slaps around 100% duty on fully built imported EVs. That ultimately turns, let's say, a $46,000 Model Y Tesla into a $92,000 luxury vehicle, something that just wouldn't sell, especially in the Indian market. And Tesla has been lobbying hard for tariff reductions from the Indian government, along with sort of dangling a $2 to $3 billion investment in local manufacturing of EVs. So far, the Indian government hasn't budged. On the other side, we also have the legacy automakers such as Tata, Mahindra and other players who are trying to lobby the government to keep the tariffs as high as possible since they're worried about losing ground to foreign EV giants. All of this also comes amid the massive backdrop of the challenges that are facing Tesla. In Q1 of 2025, Tesla's net profit plunged around about 71% due to softer demand, aggressive price cuts, significant challenges coming in from Chinese automakers such as BYD, along with the fact that Musk himself is juggling many companies from Twitter to Tesla to many other companies. And some investors are ultimately questioning, does he have the bandwidth, does he have the expertise to be able to run so many different companies in so many different verticals with a long-term strategy and vision. Finally, all of this is also happening in the backdrop of the Trump's global trade war, and that's something that we need to sort of think about. Still, India is too big to ignore, especially for Musk and Tesla. And in 2025, it could be the year that Tesla starts entering the Indian market, even if it's not fully, and then starts sort of laying down the roots and foundations for their growth in the Indian markets. While Tesla wrestles with tariffs, Chinese EV powerhouse BYD is facing a different challenge. It's one of geopolitics. In 2024, BYD sold roughly 4 million EVs globally and overtook Tesla as the largest EV manufacturer. It's building mega factories, expanding aggressively into Europe, Latin America and Southeast Asia. But BYD and other Chinese EV automakers are facing significant backlash with import taxes being levied in major markets such as Europe as well. What about India? Well, BYD is ahead of wall here. Its proposal to build a $1 billion factory way back in 2023 was shut down due to the Chinese and Indian tensions. Today it sells maybe a few thousand cars in the country. India's policy is quite clear. It doesn't want the Indian markets to be dependent on Chinese EV companies and instead wants to build its own EV industry. Ultimately, BYD needs to find a creative way to enter the Indian markets, maybe through tech partnerships, limited investments, and that's the only way that they can really hold on to the Indian market. So now that we've looked at 2 large players in a global context, let's look at one of the larger players in the Indian markets. This is Ola Electric. Ola went public way back in August of 2024. There was a massive buzz around it. The IPO was oversubscribed. The stock, I think, increased by roughly around 20% on listing day, and the optimism was sky high. In 2024, Ola sold over 3 lakh electric scooters, commanding nearly a third of India's e-two-wheeler market. But post IPO, the journey of Ola Electric hasn't been as good, and growth hasn't come cheap for them. Despite the revenues increasing, Ola's cash burn has been extremely high. In 2024, they posted a net loss of around about 1500 crores, and 9 months into FY25, losses had already crossed 1400 crores. Critics ultimately have pointed to poor after-sales service, product quality issues, questions about whether Ola can turn scale into sustainable profit. Still, Ola is betting big on vertical integration. They're looking to be India's largest battery cell gigafactory, a move that could lower costs and secure supply chains. The company also plans to enter the electric motorcycle space to expand its portfolio and ultimately stay ahead in terms of product variety and pricing. The key takeaway, Ola is still the most aggressive player in the Indian EV space, but growth at all costs will not cut it. The company has to prove to sort of turn scale into sustainability, both financially and operationally, by cutting down a lot of those product issues that we had seen earlier in the year. Speaking about scale and operational and being sort of profitable, what we have seen recently with the Gensol and the Blusmart case has been something that's had a massive impact on the overall startup ecosystem and in the EV space as well. In early 2025, one of India's most promising electric mobility startups ultimately has come crashing down, and this wasn't a lack of or excess competition or technology issues. It was ultimately fraud. Gensol Engineering was caught in a massive 975 crore loan fraud. The fraud was so blatant that SEBI described it as treating the public company like a personal piggy bank. They found that the Gensol's founders were sort of siphoning public EV funds into personal luxuries such as upscale real estate purchases, and ultimately investigations even revealed that much of Blusmart's rapid expansion that we saw in 23 and 24 ultimately were funded through misappropriated money from Gensol. As the investigation continued, Blusmart ultimately found it's a lot of cash, which led to cancellation of cab services, stranded customers, and a fleet of cars that are sort of stranded right now. Ultimately, the question remains through the Gensol case is of corporate misgovernance, more sort of transparency when we're looking at public-private partnerships and sort of funding opportunities, and ultimately what will happen to the broader EV market through this case study. But ultimately, time will tell that. Having looked at two startups that have dominated the news, especially from an electric or an EV specific standpoint, we now sort of move on to Ather Energy. Ather Energy is a quieter but no less ambitious rival to Ola. It's known for its premium electric scooters. It's positioned as a tech-driven, very heavy R&D resource player who has an extremely strong brand loyalty and presence in the market. Financially, however, the story is very similar to Ola's and maybe even Blusmart's. There is strong revenue growth, but they're deep in the red. Ather posted nearly a 710 crore loss in FY24 and continued the losses in FY25 as well, although the margins have been slightly improving. In April 2025, Ather Energy has launched its much-awaited IPO. It has come at a lower valuation, and they are looking to raise nearly 3,000 crores at approximately 20,000 crores of valuation. The company is known for its sleek scooters. It's also a premium player in the Indian premium EV segment, and ultimately holds roughly around 10 to 12% of the EV market. But like Ola, Ather is also burning cash, and its path to profitability remains long. The IPO has raised and will hopefully raise critical capital that it needs to sort of survive and grow, but ultimately analysts continue to remain cautious over the high valuations and ultimately the intense pressure that the company will see from traditional players like TVS and Bajaj, along with other startups as well. Ather's success and survival will hinge on how quickly it can scale, improve its battery cost structure, and deliver on new products that ultimately hit the sweet spot in terms of performance and price. And finally, India's traditional auto giants aren't sitting out the EV revolution. They're accelerating into it. Tata Motors leads the EV car market with nearly a 60% market share thanks to early hits like the Nexon EV. Now it's also scaling up with premium models and investing early in battery cell manufacturing through its group company. They've also struck a partnership on global supply deals with Tesla, which is ensuring long-term tech and component access. There's Mahindra as well, who's another player that's trying to play catch up, but they have strong intent. They've recently launched the electric SUV lineup with doing sort of partnerships with Volkswagen, ultimately targeting both the Indian premium markets and also the global markets. It's also doubling down on R&D, local production and future-ready platforms. And finally, on the two-wheeler space, we have the legacy players Bajaj Auto and TVS, who are also expanding into the EV market. Bajaj Chetak, backed by a brand nostalgia, has also a vast dealership network. It's also become India's top-selling e-scooter by early 2025. TVS, meanwhile, has also expanded into a new EV lineup and is launching its high-performance EV EV sort of vehicles soon. With scale, R&D muscles, the distribution network that these legacy players have on the offline side, there is a very strong competition for digital players, for new startups such as Ola Electric and Ather Energy, and along with sort of foreign players such as Tesla and BYD, that they're not just going to sort of sit on the sideline, but they're actually there to sort of take charge and be front and center in the EV game. So India's ecosystem for EV is still in its early stages, but it's growing and it's growing fast. And with this growth ultimately comes higher stakes. Stakes in governance, stakes in capital discipline, operational reliability, ensuring profitability with this higher scale. And all of these are make or break factors for all of these companies that are looking to enter and expand into the EV markets. As consumers' adoption changes and rises towards the EV space, and policies are sort of being reworked and tightening, the players who succeed won't just be fast or flashy. They will need to be resilient, they need to be transparent, and ultimately relentless about their execution. India's EV future ultimately hangs on a few questions, and these are questions that you should sort of think about. One is for domestic players like Ola and Ather, can they scale up sustainably, profitably, while ultimately fixing some of the quality and service issues that have cropped in the two-wheeler space? For foreign giants like Tesla and BYD, can they find a way into the Indian economy, into the Indian EV markets, or can they be kept out by policy? For legacy automakers, can they continue the dominance that they've seen in the wider markets in the EV space also? And ultimately, can India balance the push for local manufacturing with global partnerships that are needed to accelerate EV adoption, not just in the Indian markets, but can they expand and become similar to Chinese players? If India plays its cards right, it may just become one of the biggest EV markets. It could also become a global hub for EV innovation, battery tech, and clean mobility. A lot of it comes down to what will happen in the next few years. If you like this video, don't forget to like, comment, share, and subscribe. Do let us know what other videos you want us to cover. We'll see you next time, and happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.